Okay, good morning, everyone. Welcome to the Yankee Model Investment Club meeting. My name is Brent Gall. I'm the president. If this is your first time joining us, welcome. If you're back with us again, welcome back. I'll go through a couple of introductory slides for anyone that's new to our organization. These are the same that we've gone over in months past, but just some initial housekeeping to get out of the way before we get into the main topic of our meeting. So we are a Yankee Model Investment Club. We are a better investing model club, which means that we're a fully functional investment club with real money, but we are open to observation by the public. We were formed back in 2008. We're currently 5 members. This is up from 4. Welcome Liz Tobin, who's a new member as of last month. We're spread across 3 states, Connecticut, Massachusetts, and California. We started meeting online exclusively in 2011, and we meet, as you know, today, the monthly on the second Saturday at 11 a.m. Eastern. For new members, we're always looking for fresh insights and new members to join our team. We don't require any real previous investment experience. We're not looking for only professional, financial gurus or anything. Any new members are mentored by an existing member of the club. And we don't have any limitation on where you live, except where state laws require our club to file a return. So all partners of the club, you must be a member of Better Investing. You're expected to participate actively in the club activities. This isn't a passive investment vehicle. And make stock presentations using our stock selection guide in rotation with the other members. So generally we rotate through, one of our members gives a stock presentation each month, and then we discuss the various judgments used and decide whether we want to invest in that security. For our operations, we follow Better Investing principles. We always show respect to our fellow club members. We're all still learning this, so we meet at the at the same level and respect others' opinions and insights. We perform an annual audit of finances, we file tax returns promptly, and we follow our partnership agreement and bylaws. So if this is something that's kind of piqued your interest and you would be interested in joining us or have questions, contact Jack Finn at, he's our secretary, at the email shown on the slide, and I'll put his email address up at the end of the meeting if you have questions that have come up throughout the meeting. On the structure of the meeting, we follow a standard agenda. In a few moments, I'll put it up on the screen. There's also a PDF of it in the handout section in the control panel of GoToWebinar. Should be either on the right or left-hand side of your screen. You can download that, as well as I believe there's a handout for last month's minutes that we'll be going over here shortly. All visitors will be muted, but you can certainly type in a question in the question section of the control panel, and we'll also open it up to any other additional questions at the end of the meeting after we're done with general business. Just a note that if you joined us from a forwarded meeting invitation from one of your friends or colleagues, certainly welcome. We're glad to have you here, but it's best for you to register yourself at Better Investing website, just so you're on our mailing list and get notified of any future scheduled meetings, as well as any changes that might come up at the last minute. So you can click through the Better Investing website to get to this location. I put up the link here just as an easier way to get to it. But under local events, this is what comes up. For example, this month's meeting, and there's a button where you can register to be added to the mailing list. And then finally, a disclaimer that none of us are financial advisors. We are not giving financial advice. We're going to be discussing certain securities and using our own judgment on those securities. This is in no way a recommendation of purchasing or selling or doing the other actions on the securities. Be sure to do your own research, come to your own conclusions, and make your own decisions for your portfolio. And with that, we'll jump into the main structure of the meeting. So again, welcome any new guests that have joined us and return parties that are interested. I guess the one announcement I'd like to make, I already mentioned it, that we do have a new member, Liz Tobin, I believe lives in Massachusetts, has been with us as a full-fledged member just from last month, but has been attending meetings for a couple months now. Liz, do you want to say any words or any short introduction?
I'm just really happy to be here. Thank you for letting me into the club. I'm really excited, and I bought my first stock. I went and bought some MLR before I got admitted into the club after last month's meeting. So yeah,
okay.
Thank you.
Okay, great to hear. Welcome and congratulations. So with no further ado, I think we'll move on to the educational segment. Steve, are you all ready to proceed with that?
Yes.
Okay, I will make you presenter then.
Okay. Okay, can you see my screen now?
Yes.
Yes, sir.
Okay. Whoops. Okay, so today's educational segment was the seed of it came from Ira. So Ira, if I went off on a tangent, I sincerely apologize, but this was my initial dig on what you asked, and so this is what interested me. So this is kind of what the genesis of this is. So this is the composition of exchanges and indexes. The following presentation is my opinion only and not financial advice. Nothing is expressed or implied in these slides or in the entirety of my presentation, just to augment what Brent's disclaimer was. So what I want to do is I just want to back out and take a 30,000-foot view, looking at all types of assets and where the markets and the indices lie within those assets. Today's model club meeting is August 8th, 2020. So what we have here, and I'm sorry I lost power and internet for the majority of the week actually. I was going to have this in also a table form, but I just didn't. I made this on over the weekend, the previous weekend, so I wasn't able to display it in table form. So you're going to have to kind of wheel around with this sunburst graph. So what asset classes? So I wanted to look at this and see where equities filled in with this. So orange is equities, and what is equities? It's stock. It's the world of stocks. And so what are the other asset classes? So you have fixed income and cash, kissing cousins, alternative investments, commodities, and real estate. So that's our core, at least what I was able to find online, different buckets where you can put your money into. And so I'll just go over briefly the other one. So fixed incomes or bonds, debt funds, fixed deposits, and reoccurring deposits. Very similar to that is cash, where it's true hard currency. Cash is more of a physical asset where you actually can touch your cash. Or I think of fixed income as more of a virtual. You can touch a note or a loan paper, but it's not. It's like virtual. Then you have alternatives. Alternative investments are managed futures, private equity, which is just it's kind of like a stock, except it's private. It's not open to the public market, but it's a company, and you invest in the company just like you would a stock, except it's not available on the exchange. Long and short funds that hedge. Hedge funds, for example, are all are alternatives. Then you get into the commodity bucket, so precious metals, aluminum, copper, gold, silver, raw materials, sugar, wood, those kind of issues, commodities, and real estate. So you have the real estate investment trusts, or you can actually own the physical property. And then, of course, stocks. And so actually the portion that we're going to drill into are, are individual stocks. So the basis of the equity component are individual stocks. And then those individual stocks can be aggregated into equity funds. You can hold the individual stocks is what we do. You can have ETFs, index funds, and there's also startup funding for brand new, like IPOs or underwriting companies. So and then another layer of the equity funds is you have sectors. They can be tax saving kind of instruments, index funds, and then cap weighted. So that's kind of like the universe, and we're going to actually just drill into individual stocks. So we're going to drill into the equity component, aka the stocks. So looking at equities, there's two major exchanges, the New York Stock Exchange and the NASDAQ. And then within those exchanges, there are averages that track how the exchange does. And so there's the Dow Jones Industrial Average, and then there's the Standard & Poor's 500 or the S&P 500. And what I was surprised was, for some reason, and it was a misnomer, I thought that the Dow did the New York Stock Exchange, and for some reason that the Standard & Poor's did the NASDAQ, but that's not true at all. Those indices go across markets. So what do I mean by that? So you have companies that are only in the New York Stock Exchange in the Dow, and you have companies that are only in the NASDAQ in the Dow. So it cuts across both markets. Where's this slide that I wanted to? There's a little, yeah. Okay, so it's there. So, and then just like I was saying, the New York Stock, NYSE, and then NASDAQ stands for the National Association of Security Dealers Automated Quotations Exchange. And to my shock, when I was doing this, I was like, well, where's the Amex? Well, that was bought 12 years ago by the New York Stock Exchange. It's been long gone. So there really, I guess, there's only two that I was able to find. So for New York Stock, it's on Wall Street. I've actually visited there. It has over 2,400 listings, and that's down actually. Market cap is $22.9 trillion worth of stock on the market, and they have in 2011 their volume was $20 trillion, and their indices are the Dow, the S&P 500, New York Stock Exchange Composite, and their website is the NYSE.com. As far as NASDAQ, that was started in 71, and they have approximately 3,500 listings with a market cap of over $10 trillion, and they're at NASDAQ.com. The one thing I guess that really surprised me, and when I look back at the graph that I had made, I guess it wasn't such a surprise, but really the Dow and the S&P 500 were the major indices, and lo and behold, they went and they made a joint venture and called S&P Dow Jones Indices. So now it's actually one company, and that really surprised me when I was looking at this. I had no idea that they had actually merged. I thought they were completely separate entities, and they're not. So the Dow first started in 1882, and that was the transportation index. And I think in 1896, right? Yeah, 1896, he made the Dow Jones Industrial Average, which is the famous one that everybody tracks now. When they think of the market, they pretty much think of the Dow. Although what I think of it in S&P 500 now, I've kind of switched to that industry. There's 30 companies in the Dow Jones Industrial Exchange, and the Dow Jones Industrial Average is price weighted, not cap weighted. Here's a smattering of the 30 companies. The S&P is the Standard & Poor 500 index. It actually first started in 57, but the first year that you could actually buy the index was 75, and that was Mr. Bogle's join to the party. I wish I could have put a few $1,000s in at that year. Before that, you could replicate the S&P 500 index, but you had to buy the stocks individually before 75. And there's actually 505 stocks in the S&P 500, so it's not a flat 500. There's actually 505 stocks. And then the other surprise that I got in looking at the index was there's actually more than a dozen companies valued at 15 billion or more that aren't in the index. And an example of that would be Elon Musk's company. So his company is being considered for inclusion, and it's one of the largest ever that is not in the S&P 500 index, but he's not in yet. But he's under inclusion. So what does this kind of mean? If we just look at the S&P 500 index, and if we want to track the market and not, if you want to get market results and not greater than market results, and just take what the market gives you, then you can invest in the S&P 500 index. And so this little analysis here shows that the mutual fund, AIX, is the Fidelity 500 index fund. It mimics the S&P 500 almost to a T. Its expense ratio is 0.015%. So what does that mean? What does that mean, that small of a percentage? How does that affect us? So to put it in perspective, for every $1 million that you have in the mutual fund, it costs $150 a year to own it. So it's one of the least expensive mutual funds that you can possibly buy. And then these funds here, SPY, you can sell that during the day. It's the exact same thing. But here you're paying $945 for a year if you have $1 million. And then the same with the iShares Core S&P 500. This is another ETF, the IBB, and the expense ratio is a little less, $300 a year. So that was one of the things that I wanted to see drill down into the market, and then drill down slightly into S&P 500 and kind of get a sense of how one could track the market and how much would it cost. Fidelity does have zero cost funds, but funny, they don't have one for S&P 500. So they know what they've got there, and they're keeping that expense ratio in place. So that's kind of concludes it, and I'll leave you with my favorite quote. Luck is what happens when preparation meets opportunity. And so that's my presentation for today. Brent, thank you.
Great, thank you, Steve. I guess I must admit I didn't realize that S&P 500 is actually S&P 505. When you were doing this, did you come across like generally what is the criteria for companies to be in this list? I'm surprised that they weren't able to, trim out 5 companies if new better candidates came across, so they could stick at just 500.
Yeah. So how the S&P 500 works is that it's cap weighted, and I probably didn't go into that enough. But what they do is they spread it across industries and sectors. So just because you're huge doesn't mean you have inclusion. But I guess to put it in Kramer's terms, if you're best of breed in your sector, then you're in. But I guess if you're not at the absolute top of your sector and you're still a behemoth, I mean, a $15 billion company is a large cap, right? So, although it's a much smaller large cap these days. But that used to be a fairly big company, a fairly large cap, and not anymore. So those are overlooked now. And then, like, even Tesla is not. They're the biggest company that hasn't been included in it, but they're not in. The committee's not comfortable with Elon's actions. He's kind of erratic. I think that's part of it, and I think they're waiting to make sure that he has real earnings.
I think they need to be. Was it 4 consecutive quarters of profits or something like that? That's one of their criteria.
That's the other thing is the other thing that I learned while doing this was that you do get a certain level of protection in the sense that you have experts at S&P 500 committee deciding who gets in and who doesn't. And somebody who's iffy, like Tesla, they don't get in. At least not yet. He just turned the corner on profits.
Yeah.
So that was actually kind of a level of comfort that I hadn't had before.
There are also a couple of other indices that are a lot of other indices that are sponsored by Standard & Poor's. The two that we would see the most frequently are the mid cap and the small cap, which are parts of that. Companies typically roll up from the small cap to the mid and eventually to the S&P 500 over time. You end up with more than 500 because there are splits. There are lots of different things that flow in and out. When somebody gets merged out of existence, a new one flows in to fill the hole. So it's kind of a fluid situation, and it changes almost every month.
So we should consider it Standard & Poor's 500-ish or so, right? That might be a better term.
There you go.
Okay. Yeah. Gotcha. Okay. This is very helpful. Thank you, Steve. Any other questions or comments from the members? Okay. If not, let's jump to Jack, if you can present minutes from last meeting. We'll make you presenter.
Okay. See, is this last? Yeah, this is the right minutes. So I sent this out, and there's a copy in the handouts to all the people that visited last time. We had 63 visitors out of 167 registered. We accepted Liz Tobin last month, so that was good. So the June minutes are available online from Bivio, and I put the link here in the minutes for July. The minutes were accepted as presented last month. I figured out that I've been misspelling Shriram's last name the whole time it was listed here, so I'm sorry about that, Shriram. But I think I got it right now. Okay, the company's size diversification has gotten a little better because we added intelligent systems. So we're still a little low. The goal is to be around 25%. We're around 15 or 16%, something like that. We have about the right amount, almost 50% of mid-sized companies and a little overweighted in large companies. And we're pretty well diversified by industry and sector. We've got, I think, 7 sectors, something like that. Last month, Liz presented Miller Industries, and we liked it enough to spend all the money we had, which is only about $750 or something on Miller. Brent presented finding companies to research, and a link to that presentation, a PDF of the presentation, is here. So in August, Steve presented the education segment, which he just did, and Sriram's going to present the stock to study. The July meeting is up on YouTube, and here's the link to it. I'm the parent for Miller. We need to figure out club renewal. We'll talk about that again this morning, whatever it is. So Liz Tobin was accepted as a member, and we got another person that wanted to join the club, and we got the suggestion to share the education segment, which we did, I think. Okay, so they're the 63 members, and that's the minutes. Anybody see any corrections need to be made?
Not for me. Looks good.
Okay.
Thanks, Jack. Ira, I'll make you presenter for Treasurer's Report.
Okay. Here's our current holdings. We have $786.72 in cash. Member status. I thought you added Liz to this list.
She wasn't added I don't know why. I don't know why she's. Well, she didn't have any money in yet. That's why.
She doesn't.
Okay. Got it.
And I think it's not worth, Liz, I don't think it's worth you setting up anything to auto pay into TD Ameritrade because we're in the process of changing brokerages. So Jack will have some additional information here within the next week, you think, Jack?
Yeah, that's what they
on how
said.
to do it? Okay. Okay.
So you can see we purchased 25 shares of Miller at $28.54. And we picked up dividend in Dollar General and Gentex. And member payments are up to date. Performance benchmark. A 12.7 versus the Vanguard 500, which is very similar to the other S&P 500. And looking shorter term, 21.7 versus 21.5. And investment performance. And member performance. Any questions?
None from me. Looks good. Thank you, Ira. Okay, so let's move on to Sriram. I think you're with us.
Yes, I am.
Okay. I will grant you presenter rights. And so you should be able to either share your entire screen or share the particular application that you're using for your stock presentation.
Yes. Can you see any of my screens?
Yes.
Yep, see the agenda now.
Okay, you see the agenda. Let me see. I think I should show this screen then. Can you see the presentation template?
Yes, sir.
Yep.
Awesome. Bear with me for 1 second. I have one more. So I'm going to drag it in here. Looks like I didn't select the right screen. I think now I have the right screen. I don't know how much time I have. I will try my best to. Actually, I think you're seeing my notes. Let me see if it shows up here. No.
I think you have as much time as you need, unless it's going to go into like 2 or 3 hours worth. So
Oh no,
don't feel
no.
rushed. Take your time.
Yes. It looks like you see my notes version of it, not the actual.
That's kind of odd.
Bear with me. Let me figure this out. Okay, I think I will just show you this screen. You can see my screen with the notes to the left. Okay,
Yes, sir.
the
We can see
keyboard.
the PowerPoint.
Yes, excellent. So before I will share with you my study as well as my the summary in the template in the Excel spreadsheet. I just wanted to run through a couple of slides to show you how I chose one of these, thanks to Jack and Brent, who helped me with this. But I just followed the typical information that is available for me. I think I looked at various sources, including Fidelity. I'm going to expand on this particular company called MCAR Group. It's an engineering and construction company. Again, going through, I think this is the Fidelity recommendations. I just want to walk you through some of the steps I took to get to how I decided this. Again, I used the value line as well as CFRA report that Jack gave me. One of the things I know every month we look at the size diversification within the YMIC. I thought I would look at the sector diversification based on which, as you can see, we are a little more heavy on the consumer side as well as the technology and financial side, services side. But some sectors out of there, I think there are 10 or, depending on who you talk to, there are 10 or 11 major sectors. We have energy, materials, real estate, and utilities not included in our portfolio. Because of that, I thought maybe I can look into either energy or utilities. That's how I ended up picking some stocks to do my dry runs on so that I can present something. So basically, I followed the typical process that Better Investing recommend us, going into look at the growth company, how good they are, how consistent they are, where are we within the life cycle of a particular company, again, how their debt versus their capital situation. Again, looking at the fundamentals. So as you can see, I picked about 5 or 6 of this, and then I narrowed it down to EME, which is the MCOR. I'm going to show you the summary in this spreadsheet. I think this is the template that was given to me.
Yeah.
So even though I started to put into either a utility company or an energy company, but I ended up with engineering and construction company, because even though it's an engineering and construction, it has a footprint within the energy as well as the utilities sector. They support some of these utilities as well as industries. They have a wide variety of services they offer, even though their focus is mainly on the construction, but they provide construction to a variety of companies and a variety of installations they support. So as you can see, I'm not going to read this, but essentially they basically design, operate, and maintain buildings as well as communication systems, lighting systems. Again, the whole, they have, I think from what I understood, they are a company of a conglomerate of about 80 different companies within their sphere of influence, I believe. Let me see if I can show you. Yes, you can see it's got about 95% of their work is within the US and about 5% outside and only in UK. So they are very localized to US, but they have some work, about 5% of their work for 2019 revenues in UK. They have a whole bunch of offices. I counted about 100 plus offices. They are headquartered out of Norwalk, Connecticut. I think several companies in that part of the world. Again, digging a little more into, they have an employee base of about 36,000 plus. They seem to be a company that is on a growth for several years now. Again, some fundamentals looking at the ratios and debt to capital, about 27%. What they used to be about 10% back in 2012. They went up to 27. I think they came down a little bit lately. It's a $9 billion company, mid-size, almost getting into the large cap side. So from that perspective, probably this will not add to the diversification of the size as far as the company is concerned. Again, I looked at the Morningstar evaluations. They rank it as a 4-star. I think maybe they came down to a 3-star as of yesterday. The interesting thing about this is about 10 days ago, they were down, I think maybe 2 weeks ago, they were down at about $62 per share. Since then, they closed on Friday, yesterday, at, I believe, $74.61. I think probably we missed the best time to buy on this within the last 2 weeks. Again, the value line information that clearly shows that it's expected to grow at a reasonable size. On the right-hand side, you can see some of my notes in red. Again, it seems like a good growing company. CFRA report that said it's a strong buy. They recommend that. And interestingly enough, they project for 2021 a little bit of the earnings and the sales to be less than what it is right now, which I thought is interesting. The SSG sales growth is at about 6%, and I also considered future SSG at the same for the EPS. It's a steady pre-tax profit margin over the years. Again, I'll show it to you when I show the SSG as we go through it. Earnings seems to be within that 12 to 15 range, not the great company, but good company. I think as the companies get large, we see this to be between more less than 15. Again, based on the SSG, some of the evaluation is PE of about 16.5 versus current PE of about 25.8. Projected PE about 21. The PEG, it seems to be reasonably where we want. So you can see the summary is, in spite of the challenges they had, I think they dipped a little bit in the last quarter. From Q1 to Q2, they have reduced their revenues. I'll show you when we look at that. Actually, I'm going to go to my summary. I will just start with the SSG, the printout, the 2-page PDF summary. That way we can take a quick look at this and then we can actually run through the SSG online. As you can see, this company since 2011 seems to be growing at a reasonable growth rate, about 6% or so. And as I said, the pre-tax profit seems to be steady or growing over the years, even though they had a couple of dips in 2016 and 2013. And I did not change any of this. I left them as defaults. Again, we can discuss that in a minute. But the PE ratio is about 25.5, 25.8 versus a average PE ratio of 16.5 over the last 5 years. Again, I took the most recent low and the 26. Again, this is again based on the projections that about 6% growth rates for the PE, and based on that EPS, we have a range. Again, right now it's in hold range with the upside potential about 2.7 to 1, little less than desirable 3 to 1 ratio we look for. They do pay a little bit of dividend. Again, I think they had their annual meeting last week, and I was a little bit taken aback or disappointed on their second quarter results. But again, I think that's probably is expected because of mainly of the COVID and how we don't have any construction work going on as much as in other areas. There are some construction work that's going on, but bear with me for 1 second. I'm looking for my SSG. Oh, yes. So I started with the core SSG, and then I tried to run this in that, and then use the SSG Plus to finalize the report, because this gives you a few more steps where you can look closely and maybe you can modify as you need. So again, the growth is pretty steady. Considering this is a logarithmic scale, it certainly is a steady growth. The price versus EPS, as you can see, it's steady for the most part, with almost linear growth with a little bit of variations. But if you see in the last quarter, you can see from about 9.3 to about 9, the sales come down. Again, the pre-tax profits, again, it's steady. The ROE is, again, in that, like I said, in that 12 to 13 range, maybe 15 range last couple of years. But again, for such a large company, probably that's what we would expect. The debt compared to what they had in 2010, 2011, 12 period, it's gone up. But in the last quarter, it's come down a little bit. Again, but still, it's within the debt to capital ratio of less than 30%. 27% was the highest they ever had. Again, fundamentally, this company seems to be a growing company. So here comes the sales growth. I used about 6%. I think that's a reasonable estimate for this. Again, I don't know, I may be looking at a little different from most of other people do. I look at the trend and I try to make it little parallel or even less than parallel to what the trend is, rather than fixate upon the 50% or 30% or one number or something like that. So based on which, again, the EPS 5-year projected is about 6%. I kept it to the same rate as the anticipated growth rate. So based on that, using a high PE of about 26 and EPS of 6, it's about $150 to $160, 156 is expected, forecasted high. I used the low price from, I believe this was a 52-week low price, and used that for the lower price for the stock, which forecasted about 36. I'm sorry, it's a forecast. I use the lowest price. I'm sorry, I don't have to do anything on it. So based on this, you can see it's a little above the buy zone. About a week or so ago, it was about 65, 68. That would have been a buy zone. I think we missed it. So based on this analysis, you can see the upside is about 2.7 to 1, with less than 3 at the current price. So my recommendation based on this is to hold on this, not do anything about this. Any questions so far? Any comments or anything you want to go back and see at this?
There have been no questions posted in the questions box about the presentation so far.
Thank you, Joe.
Sriram, what was your PE that you use for the projection of high price?
6. I'm sorry.
Not the weight, the PE.
Yeah.
$26.
I use 26.
Okay.
The highest I can take.
Yeah.
I project. I mean.
Okay.
Yeah. So again, based on this, coming back to the template, I mean, there is a potential reward. There is a potential uncertainty with everything as far as the construction work goes. Like I said, based on that, it would be a good buy under 71. On July 30th, it was $64. That would have been a good price to buy. But now I don't think it's a good stock to buy. While I was doing this, I also looked at another company called MYG Group. That is one of this company's competitors, and I also, unfortunately or fortunately, within the last week, both these companies, they had their quarterly earnings calls, and I happened to listen to them. And that company, if anybody is interested, check it out, MYG Group. That seems to be doing much better than this. So that probably, if I had a chance to go back and redo it, I would do that, and probably that would look like a better better security than this one to look into. Any questions? Any comments?
I'll start. Thank you very much, Sriram, for the presentation. Very good. Looks like you touched on a lot of good points. Yeah, the first two comments I'll make is I know that you kind of bounced these ideas off myself and Jack, and when you first put the initial graph of revenue and earnings values up, I couldn't really remember signing off on, or suggesting this with that large drop off at the end. But then I realized that with some of the other companies I'm tracking, their quarterly results came back just in this past week. So I guess before when we were choosing these companies, that most recent quarter data hadn't actually been plotted yet, which looks like it kind of dropped off the deep end, unfortunately. As well as, like you mentioned, the stock price when we were reviewing this is a candidate, it was much lower, and I think more in the buy zone. So that was two unfortunate things that just, it's the luck of the draw sort of thing that happens when you're trying to choose a stock. Normally what happens to us, of course, as a club, is that when we choose to buy a stock, it falls in price the very next day. So this is kind of the reverse Midas touch, I guess.
Yeah.
One thing that I think throw out is that I don't know if I think it's possible on the online SSG. I know it's possible on the desktop version of Toolkit, is to if you're going to discount previous years, like certainly I think 10 years ago, their revenues and earnings per share, you could probably safely just ignore them. You may want to consider actually ignoring them in the charts, because it looked like on whichever chart was showing like a overall growth rate of revenue, maybe at like 74%. I think that was mostly driven by maybe 2010, the low numbers there.
Yeah.
So if you hide those years, it'll give you a better, a more reasonable growth rate.
That's it. Yeah.
Yeah. No, actually I did that. I'm sorry. I did consider that. I did not leave it in this version. Yeah.
Okay. Well, just as I guess a note to any of the other listeners that I do the same sort of thing. I generally even discount more past years, like maybe up to like 5 years ago or so, because there's no way to tell whether is it the same marketplace, is it the same management players as it was 5 years ago. So that gives a kind of a better idea of what their trajectory is.
True.
But yeah, so surprising that it was this up until last week. It was looking like about 18% growth, and then it just their quarterly results hit and it dropped off.
Yeah.
Murphy's law of stock presentation, I guess.
Exactly. Yeah. So for my analysis, I was. I guess I also didn't realize that it was such a low profit margin, like around 4%. I think you said this is what I've seen on my my SSG. That reminds me of like even like supermarkets and things like that that just have, razor thin margins, it seems. But then I don't know of a good, any of their peers or anything else to know if whether construction industry is just usually pretty lean on profit margin.
Yeah.
I think for my other analyses, I kind of judged, I took the most recent years low and high PE and calculated it through and really got very similar results to you. I think my buy range is up to $73.90. So we're just over it now. We would have been within it, a week ago or so before the spike in stock price happened.
Yeah. I mean, what surprises me is, the second quarter results bad, but still in the last 2 days, it's gone up like $4 or $5.
Right.
So
yeah,
the market works in mysterious ways. That's all I can say.
I would agree with that. Yeah. Okay. Other comments?
If you want to show my screen, I could show you the comparison to peers in profit margin.
Are we at a good point? Steve and I have a lot of requests for copies of your education presentation. If you would email it to me, I'll load it up into the handouts if you can do that.
Okay. Do you want me to do that right now or after
If you
the meeting?
can, yes, sir.
Okay, so here you were asking about profit margin in the industry, so this gives you some indication right here.
Uh, 3%.
So it is pretty low.
Oh, okay.
Yeah, I'm in the hold range also, and I had 6% type growth as well, and actually buy up to 55 in somewhat more conservative PEs.
Yep.
I would say, if any, we could put it on the watch list.
I think that's a good idea. I got a similar kind of number around 66 or something. But I think I did the same thing. I fiddled with the PE till I got something little. I was a little more conservative on the PE.
That's all I have.
Okay. Steve, did you have any comments?
Yeah, I've got a few.
Okay. You have the floor.
Thank you. So let's go over the pros and the cons on this thing. So the pros are it's a mid cap, so it's something that we need. It's also a construction services company, which is something that we don't have. And of course, they're from Connecticut, which is my favorite state. The Altman Z number is 3.98, so they're not likely to go bankrupt. So those are the things I like about it. So the cons. So Brent, you stole my thunder. I had literally written this out before, but you identified exactly the issue that I was struggling to articulate. And so they just took $1.52 a share loss.
Yeah.
And I'm like, oh my God, is COVID that bad? I guess it is. So then I looked back in their history, and I saw that they pulled the same, quote, stunt, unquote, at the financial crisis, where they took a $2.60 per share loss. So what if I had to bet? What I bet they did is just like they did in 2010. They took a dumper quarter and they just dumped all their losses and anything that they felt like writing down.
Yeah.
Okay.
They wrote down. So what I would really be curious on seeing then is if they pull this quote stunt end quote again. So my gut feeling is no, that this is just, oh, we've got carte blanche. The market won't punish us for doing this because everybody's doing it, and we don't do it very often, only once a decade. So let's just take a loss. So that's kind of my analysis of what happened there. Then the other component of that I think Brent so well articulated much better than me is this. They had roughly, and I didn't have internet this week, so I couldn't drill down as like I would have, but roughly, and I'm doing this from memory from the weekend now, a $300 to $400 million loss, roughly, year over year. And that translated into a $1.52 loss. So that's a horrific, that is an absolutely horrific profit margin. It's horrendous.
Yeah.
They're razor thin on the profit margin, and that is a big that's a big worry to me. And thank goodness Ira showed that's their industry. It's like Walmart, razor thin profit, but they sell a gazillion of it. Well, this is something similar. So I guess that's my qualm with it. It's I think it's really good. I think that it's I don't know. I'm trying to find the words for it. I guess what I would need to see is this: if their $1.52 loss is like a one-time, just get rid of all the losses. So I agree that this should go on the watch list, but I wouldn't be buying it right now, especially with this giant loss that they just took in this quarter. So that's what my analysis is. Thank you.
And I would say that as far as I know, COVID isn't over yet. So I wonder what their next quarter will be, because I can't imagine that all the construction projects have restarted, just in the last quarter.
Yes, I mean.
Yeah, even when they roll out the vaccine, it's just going to be frontline workers first.
Mm-hmm.
So, and construction workers are not, they don't qualify. That's not that bucket. So it's going to be the nurses, the doctors, the EMTs. Those are the people that are going to get, the police, the safety people. Those who are going to get vaccinated first as these vaccines roll out, and that's not this demographic. So they're going to have to wait like everybody else. So yeah, it's going to be a while.
Mm-hmm.
No, actually, on top of that, one of the things that causes me concern is, most of the building occupancy rates will go down in the next few years. People are started working from home. I don't know if the construction and engineering, unless you're a specialized something, the general building construction may not be that that promising in the near future.
Mhm.
Mhm.
Yeah. Yeah, this is Liz. I listened to their earnings call, and one of the things that they talked about was part of their business is going to be transferring into the air filtration, because they do a lot of building systems. So they'll be doing some, they said that was going to be small contracts, but probably a lot of them to sort of retrofit the filtration systems for the buildings. So that was a good plus. But I also wonder about, since a lot of their business, I think, also is in the office building maintenance, the cleaning, maintenance, snow removal, landscaping. So that's probably going to be off due to the workforce staying home. Another thing that I caught my eye was they also do about 12% of their business is in the oil industry, and BP just said this week that they thought the oil was going to be down like 40% over the next 10 years. So I'd like to see EMCOR address that issue, if they have any plans to transition out of the refineries and go into something else. I had a much more conservative view going forward on this company. So I think I'm in the sell range right now, since the stock price has gone up so much over the last week.
Interesting. Can you give us just like generally what was your assumed like revenue and earnings per share growth rate and high and low PEs that you assumed?
Yeah, I updated my SSG just this morning, and I didn't really have a good chance to look here to see what's how the numbers square here. So let me see here. So forecast sales and earnings. So they had a growth rate of 21.9 for the last 5 years, and I took that down to 15. I took that off like 30%. So my EPS growth rate is at 15%. So it gives me a projected EPS of 5.67. And let's see. And I took the low price of, let me see here, the low stock price. I used the recent market low, which, let's see here, was 41.9. So let me see, I'm still sort of tooling through I think my high price stock price came at 90.8 with a high EPS forecast of 5.67. And so yeah, I'm not sure like how to adjust the numbers given the situation that's going on. The market seems to be doing great, but everybody's talking about, we're in such a recession and unemployment. So who knows how this is all going to look moving into the future. So that's why I'm taking such a conservative view. The other question I had, and this is kind of something that I've been thinking of on all of my SSGs, is when you do the upside downside ratio, if you're not within the 3-to-1 ratio that Better Investing recommends, is that something that you guys take into account pretty consistently, or do you have leeway there?
Well, generally, yeah, we aim for the 3. If you're below 3, I think that means you're not really in the buy range. I wouldn't say that we take that as gospel. Like if you were 2.9, I don't think we would take a hard line and say we will absolutely not buy it because we have to be 3 or greater. But on the flip side, then if you have, like a 99 plus to 1, I think it means that your judgments have been, you've either judged that like the low price, the lowest price you would see is already achieved by the market, or the highest price you would see has already been exceeded by the market. So there's some problems with the numbers there. So generally, I think if it's above like a 10 to 1 or below a 3, that's when we kind of have concerns, I think.
Okay.
And Brent, I'd like to add something.
Sure.
So Liz had mentioned that how do I make the numbers come out? Or she didn't say exactly that, but in other words, how do I adjust the numbers? And the answer is you don't. You did it exactly perfectly. You went conservative. The stock doesn't meet the criteria, your criteria. That's perfect. It just doesn't. If you try to torture the numbers, they'll say anything, and you
Right.
want them to tell you the truth. So no, you did it right. Perfect. You did it perfectly. So don't second guess yourself like that. That was exactly right.
Okay, thank you. The other thing, one last thing, from their annual report, MCOR said that their business has traditionally lagged recoveries in the general economy, and therefore, after an economic downturn, they may not recover as quickly as the economy at large. That might be something to think about too.
Yep.
Yeah, that tells me a better candidate for a watch list to see
Yeah.
if once we see the light at the end of the tunnel for coronavirus.
Yeah. No, again, I know probably Liz will agree with me, after listening to their second quarter call, I was really disappointed. I didn't see anything that they're going to offer or counter. Their management is not going to say anything how they're going to bring their business back. I think, is that how you felt, Liz?
I felt a little bit better actually, because they had talked about transitioning into the air filtration with the UV filters.
No, but that was only a small portion of it. But
Right.
yeah, no, I agree. Again, if anybody is interested, look at the other company I looked at. It's called MYR Group.
Yep.
It's a medium company, and they are somewhat similar construction business, and they seem to be one of the things that really impressed me is they're looking into transmission and other power lines for the greener energy market. So
It's MYRG, Ira.
MYRG. Mm-hmm.
M as in.
Yeah, as in Marabushi.
Oh, there you go.
I'm sorry, I couldn't resist.
Well, looking at the clock, I think we'll table that discussion. We'll leave it to individual folks if they want to pursue the MYR group. Why don't we move on now? If there's no other comments for MCOR, we'll move on to individual holdings. So Ira, I see, yeah, you have it up on the screen. Thank you. I'll go ahead and kick off here for FleetCor. New value line came out. Even though they're geographically diverse, they do get a large portion of revenue from countries that have been hit pretty hard by COVID, namely Brazil and unfortunately United States. So as such, they're looking to kind of backburner some of the acquisitions, which is how they've grown significantly in the past. Their quarterly results came out. The total revenue decreased 19%. Earnings are down 39% compared to year ago quarter, and they were saying that this is I think the first time that revenue and earnings have regressed from a year-to-year standpoint, unfortunately. It's currently $240.01 per share. I have a buy up to 233, so it's in a hold range currently. For Athene, excuse me, they reported record quarterly deposits, approximately 15% increase in net income compared to a year ago. Book value is up 14% compared to a year ago. Surprisingly, they're in the buy range, $35, $35.41 a share. A buy is up to $49. So this might be a candidate for us looking to increase our holdings. Excuse me. And then finally, Tractor Supply Company. Their stock price continues to increase. It's just on a tear. They're up $11 since our last month's update. Their net sales have increased 35% from year ago quarter. Earnings per share is up 61%. Online sales, they said, had a quote triple digit increase, but they didn't actually say, or what I could find, what those triple digits were. But anyway, that sounds very promising. And their gross profit margin increased 1.5% based on lower frequency of sales promotions. So I'm guessing fewer sales that would decrease that margin, as well as a good product mix in their sales. And just as a note, it's actually approaching my sell zone. It's currently, like I said, $148. Our buy is up to 66. So currently in the hold, but just going gangbusters for now. That's it for me. Steve?
Yep. So Google reported earnings only $38.29 billion for the quarter. They're over $1 trillion valuation now. Trailing 12 months revenue is only $166 billion. We're not at the 52-week high, but we're in the top quartile. They acquired a 6.6% stake in the security monitoring provider ADP. Poor Sundar got drilled by Congress. He got hammered, and you would have thought that the stock would have went down, but no, the stock went up. Fortress balance sheet to keep. Visa, $4.8 billion in revenue. Transactions were down 16% due to the pandemic because it's affecting Visa worldwide. There's a shift. There's a seminal shift now that was on the conference call in consumers, the way consumers spend. 78% of consumers and 60-something% of small businesses are spending differently, and Visa is trying to adapt. They're in the upper quartile of the 52-week. 3 analysts did just give a minor downgrade to the stock, and I didn't see any horrific news that would affect Visa. As far as Middleby, they had a horrific 38% decline in year-over-year revenue, $471 million in second quarter revenue. No, it was not a loss. So, and I was reading the transcript of the quarter, and lo and behold, pizza was the segment that was keeping them alive. Why? Because pizza is the safest thing to take out for COVID, because it just goes right from the machine into the pizza box, and so I think people know that, and so they seem to be doing pretty well. They did get downgraded pretty heavily, so I wasn't too choked up with that. And I don't have, I'm traveling, so I don't have my SSG to know whether in the hold range, but I would just hold them for now. I would not advise buying any more, especially after the downgrade.
They went up enough to get us in a profit zone, so that's nice.
Yeah, there was that, and now I think people are the reality is this is not going to be a V recovery. This is going to take a little while until the vaccine comes out, and then because the spending patterns are wildly different. So they have big segments of like there were some specialty takeouts and that they're just not selling. The pizza was the one piece that was doing well, but the rest of it is hurting because people are scared. They're not going out. I'm one of those people. Thank you.
All right. Thanks, Steve. Ira?
Okay, Gentex quarterly earnings were 2 cents versus the 12-cent estimate, and last year was 42 cents. Revenue was 229.9 million versus the estimate of 262 million. Shipment of mirrors was down 51% year over year. Expenses were up 4.2% year over year, and it's currently in the hold range. Intelligent Systems just left the buy range at the current price here, 34.47. Their revenue was 8.1 million for the second quarter, a 7% increase year over year. And earnings per share was 10.4 versus 23 cents last quarter. They're a hold. Regeneron is still on a tear here. They're in a hold range. I have a buy up to 436. Their earnings was $7.16 in the second quarter. They beat the estimate of $6.73. Their revenue was up 24% year over year to 1.9 billion, beating the 1.8 billion estimate. Their phase 3 antibody trial is going to actually come out with some results sometime in September. That's what I have.
Okay, thanks. Jack?
Okay, Essent reported last week 15 cents a share versus $1.39 a share last year. Revenue was 236 million versus 211 million last year. So revenue's up and earnings down. I think I got that right. It's a buy below 44 bucks. That's present price is what is it? 48 bucks. No, 35. So it's in the buy zone. Yeah, so this is only the second time that their earnings have declined since 2016 at least. I think that's more or less when they started being listed. So Dollar General are going to report earnings the end of this month, but signs are good. It's a buy below 142. Its present price is 195. It's been higher. It's been over 200 a few times the last month. So it's actually getting close to the sell zone of 236, closer. Yeah. So they're in the hold zone. Miller, the stock we just got, is also reported earnings last week. Revenue 128.5 million, down 42% from last year, and earnings per share was 51 cents, down 45% from last year. Miller is, I think, in the buy zone still. Yep. That's it for me. Oh, I can do the watch list if you want.
While you're still talking, why don't we do that, and then we'll circle back to Liz.
Okay. So 5 below Viva and DHI, DR Horton are all in the hold zone, according to my old SSGs.
Okay. Thank you. Liz? You're on mute also.
Thank you for that. All
Hello?
right. So Alta, well, when I did the SSG at the beginning of the week or late last week, they were in the buy zone, and now they are kind of flitting into the hold range. And depending on which toggle I use on the SSG, if I use the 25, 50, 25, it's a hold range. If I use the 33%, it's in the buy, but the upside downside ratio is 2.4 to 1. So, but the analysts still seem to like the company. Value Line said on July 24th that they're looking for resumption of growth at both the top and the bottom lines in fiscal 2021. And so they anticipate that there would be a worthwhile price recovery potential out to 2023, 2025. So says the company's healthy finances should help it weather the current storm and produce healthy gains long term. So we could get it in the buy zone. I think it would be a good thing. It's kind of like I said, it's depending on what your numbers are on the SSG.
Okay. Generally, as a rule of thumb, we stick with the 25, 50, 25 bucketing values. So it sounds like with 2.4, it's in the hold zone currently.
Yeah.
Okay. Gotcha. Okay. Thanks everyone. Anyone want to put forward a motion for buy or sell?
Well, our goal is usually to have 3% of our total as a minimum for a stock, and Miller is 0.5%. So if we still have confidence in Miller in the buy zone and we want to buy more, I would suggest we take the available funds and do that.
Okay.
I agree.
I'd be okay with that. Liz, Steve?
Yep, I'm good with that.
Yeah, I would second that. Yep.
Okay. Sounds unanimous. So we'll buy it with $780. That'll probably change it over to what, 1%, we think?
Yes.
Okay. Baby steps, I guess, but getting there. Okay. Any other motions to then sell any existing holdings?
We should think about what we want to do with Dollar General and maybe Tractor Supply. And there was another company that was getting close to the sell zone. I don't know if Tractor Supply was flirting real close, but something else was. I forget what it was.
Tractor Supply was within, I think $5 or $10 or so.
Because that means the growth rates that we're projecting are very low. There's single digits, low single digits. At least I think that is for Dollar General anyway. So I don't know that we want to do anything about it this time, but we should be thinking about getting those, what to do when it gets this close to sell.
Yep, I agree. I wouldn't necessarily move to sell either of them this month, but yeah, it's, take the gains, take at least some of the gains while you have them, and then that's the toss up, is that are you exiting by selling some of them, and then you miss out on future growth, but it can't grow forever. So I think we keep a close eye on it, for future months, and then maybe sell a little bit of them to lock in some of those gains while holding the remainder. But that's a good point.
Brent, I have an issue with that is that I think Tractor Supply and Dollar are actually COVID plays,
That's true.
and because I think people are doing more of their own stuff, and people aren't going out. They're not driving far to the store. They're going to Dollar General,
Mhm.
and they're going home. So I think they're going to do really well. And then I would keep this until the vaccine. I think it's going to push until the vaccine comes out, and then you might see a drop off there. People will go back to a more normal spending pattern. But I think as long as COVID's rolling, and it is, we might want to keep these. Thank you.
Yeah, agreed. Sadly, I don't think it's going to be wrapped up in, a month or two, but good to keep an eye out on it, because if it can take a fall by, over the course of a couple of days, and it'd just be a shame if something were to happen that we hadn't locked in, the gains earlier on. But all good points.
Yeah, both of those stocks are followed by investment advisory service, and they're in the overvalued range.
Yeah.
With upside to downside ratios like 0.3, things like that.
Okay.
But they're not saying to sell it.
Mm-hmm.
Yeah. Okay.
All right. Let's then move on to, I'll take control of the screen back just to put up the agenda for our final wrap up here. Okay, just getting on to now old business. Just a reminder, club renewal due September 28th. I started filling out the form, and then I was like, well, I needed some information from Liz that I can get separately, as well as we have the question of Sriram's application. So I'll hold off on doing anything with the official club renewal until we get that question answered.
Yeah.
But like you said, we have a little bit extra time.
Yeah. I tried to renew my personal subscription to BI, and they said they didn't want to do it unless I also renewed the club. So I didn't want to do that.
Yeah.
But yeah, so I don't know how to do that, and we should think about it some more.
So I was mailed a hard copy of the current roster, which still has Nancy on it, like I mentioned. I'll correct that. I'll add Liz. And what my plan is that once that is finalized, I'll do a PDF version of that, and I think send it to Ira. If you're going to be cutting the check for just the club dues, not the personal membership fees, and send that in, and then.
It depends when the fidelity checks are what we're using and those.
It'll take a couple weeks to get that figured out, I think.
Okay.
But
I think if we have until September 28th, and to be honest,
there's still time to get it figured out.
Yeah. But I think once we have that, then Jack and everyone else can follow in afterwards with your individual fees for your BI membership.
Okay.
Okay.
So Brent, just so I'm clear, so we're going to hold off until we get the clear signal to pay it individually. Is that right? Or?
Yeah, I think first step is that we finalize the club. We'll discuss after this call Sriram's application. At that point, I think we'll know what the club roster is, and then I will update that. But I don't think I can actually submit it electronically. I think they still want it mailed in, with the initial payment. And then so I'll get that corrected form into Ira's hands or Jack's hands. You guys let me know who would be actually paying it, and then from there. And I'll share it with the other members, of course, but then individual members can opt in for, if you want the SSG upgrade and things like that for your individual fee. So I think, Steve, hold tight, and hopefully in the next month or so, we'll have that resolved, and you should be getting an email from me as far as next steps.
Okay, thank you.
Sure. Okay, moving on, new business then. We've touched on it. Anything else on the new brokerage or the move to the new brokerage, Jack?
Yes, we have an account. We have a number. There's $100.03 in it. So we don't have any checks yet, and it'll take about a week, they said, to transfer the stuff over from Ameritrade.
And we should
Okay.
all get a bill pay to
Yeah,
Ameritrade for September.
and set one up
Yep.
for Fidelity. And I'll get, as soon as I get my act together, I'll send out something early this week about how to set up, or what our account number is and that kind of thing, so we can all set up automatic deposits for Fidelity.
Okay, sounds good.
I
And
just
then
have
I
a
guess,
quick question.
yeah, go ahead.
Ira, did you say that we should be depositing our September money into Fidelity? Is that right?
That's right. And Jack is going to let us know how to proceed on that, right?
Yes.
Okay, so then I'm going to cut off TD Ameritrade
Yes.
and then add Fidelity for this coming month.
Yep.
Yes.
Got it.
Okay, thanks, Jack, for that update. Next item was a topic Ira had put forth in one of our previous calls regarding term limits. Ira, do you want to say a few words on this?
I think it would be better for the club if we rotate the officers more frequently than we have. And maybe if you've been in an office for, 2 years or whatever we decide upon, you're not eligible for the next year in that office. Although you could run again the year after that for that office. And I think that would keep us fresh as a group if we did that. So I'm saying maybe 2 years if you want to change it to 3 years, I don't know, whatever. But I was the treasurer for 10 years. That's not a good sign.
But you did such a good job, Ira.
Right.
And I was president for at least half of that time as well. So I think we should put it in the operating procedure, some criteria of that nature.
Mm-hmm. I guess I would be open to that. I didn't hold as many offices as you did, but I had secretary, I think, basically from the founding until a couple years ago. I guess the one argument against is I don't think any of us were forcing the folks to be in those offices. We kind of just continued to hold them because it was comfortable and we knew it. But I agree that we might need a little bit of a fire lit under us to mix things up and kind of cross train in the various offices.
I think I'd just like to suggest that we should probably add assistant treasurer as an office, and kind of make that be like in a lot of societies, there's the assistant treasurer kind of automatically runs for the treasurer the next time.
I totally agree. That's why I pushed you to be assistant treasurer.
Yes. And thank you for that, Ira.
And Steve, you've been vice president forever. Maybe the vice president should step up to president.
Steve's overwhelmed.
Yes, I'm not sure what to say actually, other than when I was president before. Say it challenging. So I totally understand where you're coming from. Yet, I think my vote would be to leave it status quo. But I'll go along with if majority rules. But my predilection would be to leave that status quo as it is.
Well, I think, Steve, one big question will be, would you be willing to take a different role? Like Ira mentioned, you have been vice president. Could you take on, I think right now, Jack is wearing a couple of hats, and at the next election, I think he's going to be wearing at least two if things don't change, the secretary and treasurer. Would you be willing to take on something like secretary or in future years, presidency?
Of course, yes.
Okay.
Yeah.
I will
Anything to make sure that the club is successful, because the club has been wonderful to me. So no, you have to give back, and I agree with that. But I don't know if we should change bylaws to that. But yes, I would be willing to do either one of those. But wherever the gap is, I'll step into it.
Well, one nice thing is, as we're a small club, we can change it to add term limits, and if it's a disaster, we can change it to remove them later. That's the nice thing about kind of determining our own destiny. I think for me, it's been a good experience, doing presidency over the secretaryship. I've always shied away from treasurer just because it seems kind of overwhelming and technical, but with Bivio and everything, I think it might be within the realm of possibility. So I'm okay with adding term limits. I made a note to, I think we should talk more about the details of the assistant treasurer as an officer. I'd be okay with that, but I think we should probably discuss a little bit more in depth, maybe next meeting. I'll add it to the agenda. So we can propose wording to add to the wherever we list that out, either partnership agreement or operating procedures.
Yeah.
Are folks generally okay with a 2-year term limit?
I think that would be fine.
Okay.
Yes.
And
Yes.
this will be taking, I guess we need to actually add it to the documentation and everything, but it would take effect. I'd say it would take effect, at the next election. Like that's when we start that's when we would start enacting it. So I think this coming election, we play some musical chairs if people have been in roles for, more than 2 years.
Great.
Okay. And then the only other new business I had was Shriram's application. We'll discuss this after this meeting. Any other new items that have come up?
What about, we discussed at our business meeting potential new members and how to proceed on that?
Oh yeah.
Yes, good point. So I don't have the paper in front of me, but I think to other folks, it's been great having a lot of outside folks join us and show interest in the club. We like to continue to encourage that. We also want to make sure that we don't overwhelm the current club members and take on too much new blood too quickly. So we've discussed that now I think we're going to, now that we've had Liz and Shriram be kind of the new presenters for stocks, we'll go back to having the existing club members present for the next couple months. And I believe that carries us through then, I think until January, right? If I have that number correct. And so then at that point, I think we'll look at scheduling in the next new applicant for a stock presentation. So nothing's changed as far as whether people want to continue to attend meetings, ask questions, participate in that manner, but we'll switch back temporarily to have our existing members or the old existing members present their stocks in a couple of months to come.
Can you give me the presentation, because I have that list of attendees that have shown interest in, thank you, in becoming members. You see my screen?
Yes.
So
Yes.
this is as of last meeting, but we had Liz Tobin present last month, and Sriram presented this month. Bill Stafford has expressed interest, and he's actually attended as much as Liz has.
Okay.
And then David Sky has also expressed interest. Sharon Watkins and Annie Kachin just last month's expressed interest, I think. So I thought we were going to give an opportunity, if they want, for Bill or David, the next two people on the list, to present before the members present. Did I get that wrong?
That's what I recall. Could we have them participate in the meeting here?
They are both online. I will open. Bill, I just unmuted you, and David, I'm going to unmute you.
Can you hear me?
Hi,
Yes,
Bill.
sir.
Yep.
Yeah, I think I'll be able to do a presentation.
That's great.
Yeah.
Dave Scott here, and I totally, understand what Brett was saying, and I don't want to be a burden, and yet either I am in an existing investment club right now, and would just be grateful to be able to join this model investment club.
Okay, excellent. And let me, I guess I spoke out of turn. I have since opened my notes from our meeting, and Jack, you and I are correct. I had it wrong. So I have that, yeah, the notes we took were to actually at this meeting talk to Bill and David about a September and October presentation respectively. And then, so I was kind of shifted. And then we start back with our old member presentations, and then the kind of the opening for new applicants wouldn't be open again until like March 2021.
Yeah.
So sorry about that miscommunication.
Yeah.
So I did communicate with Jack that I have a conflict in October. So, if I miss my,
So we could
sorry
switch,
about that.
We could switch. I think I'm the next member, original member up. We could in November, so we could switch October and November. You could do November, and I'll do October.
Okay.
Well, I have you down for presenting in September, Jack.
Right. So we'd make Bill present in September. I'll present in October. David will present in November.
Oh, I see. Okay. Does that work for you, David?
Yeah, that would work fine. I'm sorry about October.
Okay. Yeah, no problem. And then a Bill is September. Is that did you say that was okay with you?
Yeah, that's okay with me.
Okay.
Okay. Good.
I
Okay.
have a question that was proposed about your change of brokerage. Several folks are interested why you're moving away from TD Ameritrade and how you chose your new one versus other brokerages that you might consider.
I could speak to that. Ameritrade is being acquired by Schwab. I was in contact with Schwab, and they said, we don't have much information for you till next year, but maybe you'll be grandfathered in as a club. And by the way, in general, we don't take investment clubs anymore. So with an attitude like that, it was not very appealing. Also, we wanted to beef up possible security features, and I already have a Fidelity account they have several levels where you can go into their website. One is like a read-only level. We wanted to make sure that, especially with the way the club is expanding right now, that we would have good control over the Fidelity account. And they also have a feature where you can, as an authorized person, you can lock the account so no money can leave. I have not seen these features in Ameritrade or Schwab. So it looked like, and Fidelity also links up to Vivio right now. So that's why we picked it.
I hope that answered everyone's question.
Okay, I'll take presenter rights back here.
Okay.
Just a few other items, then we'll wrap up. So this a stock to study, I'll have to revamp this with the discussion we just had. I wanted to highlight education segment, so Liz will throw you right into the baptism by fire sort of thing. I have you down for an educational segment in September. We can certainly talk, offline with details on that. It doesn't have to be super elaborate or super in depth or whatever. It's just a, couple minute presentation on a topic of your choosing that you're interested in, or that something a lot about and you want to present it. I think you've been to enough meetings now where you kind of get the flavor of what we're looking for, but wanted to include you in the mix here. So let me know, or others, if you have concerns or want to bounce some ideas off of us.
Okay, great. Thank you.
Sure. Okay. Any other points of business that we need to talk about?
Denise Harder has sent a message saying that she had sent an email expressing interest in joining, but she did not see her name on the list.
I apologize. I have been overwhelmed perhaps this month with the Fidelity thing. Yeah, her name is down here, but I didn't note that she was interested in joining, so I missed that. Sorry, Denise. I'll change that. There we go.
Okay, thanks, Jack. Joe, any other general questions that might be worth repeating for the benefit of the other attendees?
I think we've covered just about everything. I did have a request for the spreadsheet.
The spreadsheet. Oh, the analysis template?
Yes, sir, the analysis template.
Okay. I don't know if we have enough time to post it in the handouts, but I think we could probably post the example in the public folder, right, Jack?
Okay.
And point out there.
Yep.
Yeah.
I know the requester for the information. I'll tell him how to get there.
Okay. Great. All right. We went a little bit over time, but I think a lot of good discussion points today. So thanks everyone for attending. We are, like I said, we meet every second Saturday of each month. Our next meeting is September 12th, same time. If you've already registered, you should get a email, I think a week, a day, and an hour from, ahead of time as reminders. If you're not registered, please go to Better Investing and register so you're on the list. And any follow-up questions that you have or you're interested in joining, email Jack at that email address shown on the screen. And we look forward to meeting with you again next month. Thank you.